I'll be uploading this. Okay, good morning, guys, and welcome to our weekly market outlook here with Untitled Capital / FX Pro. So we'll be looking at the markets for the week, some opportunities in the markets, some of my favorites, not all, but just a few of my favorite pairs, what I'm looking at to see whether I'm going to trade them or not, or how I'm looking at to trade them. We'll be discussing all that in a brief. So as usual, make sure you, if you're watching this on the YouTube, make sure you subscribe to the channel and leave a like and comment as well. Now, let's jump straight into what we have. First off, you need to understand that all the things being discussed here are my own personal opinion. This is not financial advice. You have to make up your own mind as to what you trade, because trading the markets involves risk and you want to ensure that you understand what that means as well. Okay, so my name is Untitled Alexander, aka the FX Chief. I'm the senior market analyst at Untitled Capital, and I'm a technical trader / smart money trader, and I've been doing this for quite some time. So I'm going to be your host as usual for this session. So I will look at some overview for the markets. We'll look at some fundamentals, and we'll look at some trade ideas. So in terms of fundamentals, we'll look at some of the major news coming out and what we need to pay attention to, see how we manage ourselves around those periods. And then we'll also look at some trade ideas that I kind of like their structure and how we plan to play out. So first off, we'll be looking at, so not EURUCAD, we're looking at EURUSD, GBP USD, AUDCAD. We might not run through all of them, but at least we'll run through a few of them. We'll look at GBP USD, crypto, and USOIL. I always look at cryptos, just overview analysis, and then we'll look at the dollar index as well. So with that in mind, we're going to jump straight over to the chat, and we're going to more or less dissect what we see there. So let's jump straight there. Okay, so starting off looking at the DXY, I don't necessarily trade this. I just look at this to figure out exactly what to expect from the dollar going forward, at least for the week. Now, for those of you who have been joining me on my classes, you would know, we talked about this a few weeks ago, while this was still up here. I was looking for this to drop down into this zone and then continue the next leg higher. Now, notice exactly what happened. We had dollar strengthening throughout last week and just for 2 weeks. After we had this push up, we had this brief consolidation, more or less Y curve, and then we had this drop down into previous SND zone where we were looking at, and you can see how market tapped into that zone, and we had this push higher. Now, the interesting thing about this push higher is this: it still gives dollar the bullish outlook. I still, with this in mind, it still gives it the bullish outlook because we have taken out, notice how we have cleared previous high here. So in making this new high, we have broken structure to the upside. So what that means is more likely than not, we would, even if we have retracement down, we are going to likely see price break up higher. So with this in mind, there's something you also need to understand. Now, this is the impulsive move. This is the correction for retracement, and we have the next impulsive move. And we could have a correction before the next impulsive move. Now, if we have a correction here, that means a weakened DXY, means a weakened dollar. That would also affect the dollar basket, and you can see dollar weakness, but that doesn't necessarily mean a long-term dollar bearishness or anything of the sort. It might just be the markets making new lows to gather momentum to make new highs. So with this in mind, with the way it's playing out, we might see this week where we have a weakened dollar, right? Because down here is what I would like to consider our protected low. So this is played out, done with this move. Down here is what we consider our protected low. And then up here, depending on if this holds, we'll see how today's candle play out and tomorrow's, because that will be the real reason behind if we get, if this is the high, or maybe we still want to make a clear high. So down here is our protected low. Up here is our protected high to see if this is where we are going to top out. Now, so with this in mind, what that means is if this bias plays out, the market would likely drop into one of these zones to then proceed higher. Now, this drop down here would mean a weakened dollar, and that would play out on our currencies and as well. So remember this bias when we jump over and look at euro dollar and pound dollar as well, because remember, if the DXY is going up, which means dollar strength, then you see the euro dollar go down because dollar is the quote currency. You see pound dollar go down. Inversely, if the DXY of the dollar index is showing weakness, you'll see euro dollar go up, pound dollar go up, dollar CAD go down. You know, understand the drill. So if that is what we're looking at for this, then this would be our structure, right? This would be our structure that we're looking at, our impulse move to the upside. And then we could find the market come into one of the retracement zones. So if you're a Fibonacci trader, you could just simply place in this to try and figure out where the market could find support to then continue moving higher. So we could, the golden ratios within the 38.2 to the 61.8 fib levels, based on the way the market is or reacted around this area, the place I'll be more interested in is this 61.8 fib region here. But that being said, I don't trade basically based on fib, but I understand it's because I understand that we're all different traders and we have our different preferred style. It doesn't matter what your style of trading is. If you have rules that you trade it by, stick to it. Now, with that said, remember, we're not trading this on its own. We're just analyzing this to try and figure out what to do with the dollar basket for the week, or at least for some portion of the week. Now, if we go to euro dollar, which is the most traded currency pair, you now see that bias. So notice when dollar index is going up, because it's inversely proportional to euro dollar, we have euro dollar coming down. And now, just as you notice how it is, this is almost inversely correlated to the DXY. Notice in the DXY, we are topping out with this kind of structure. In the euro dollar, we are showing some kind of weakness with the same kind of structure, just flipped over. So that being said, I also need to respect that. So now there is a much larger outlook. This I like to do kind of like a top-down analysis when I'm trying to analyze the currency pair. So notice that what you want to notice here is this, that the market has been bearish for quite a while. Like we've been making lower lows and lower highs since we topped out here. So this is what I mean. We rallied all the way from this bottom and we're making highs, higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. Now, since making this high here, notice how we failed to make new highs. And what then happened is we made a low, we made a lower high, and then we made a lower low, a lower high, a lower low, a lower high, and a lower low. And right now we've made another lower high and another lower low. So clearly it is obvious that the trend is bearish. You know, we've taken out this bull trend, the trend is now bearish. Now, this doesn't mean that the market will keep dropping forever. You notice when the market was rising, it did not keep rising forever. But what I like to do, what the market always likes to do is find previous areas, price liquidity, and all of those things. So with price structure, we have to respect that, you know, the market is bearish. So any bias we have to keep that in mind. However, we also need to understand that if we have, you know, because the market is bearish, doesn't mean it never pulls back. So you see how this drop here, even if we're pulling back into this zone, that could just be a retracement, but that could offer us opportunity to trade this all the way up and maybe look for the sales around this zone to take it back down, except the market wants to change structure. And in order to break structure, this is the protected high. So unless price breaks this high, euro dollar is going to continue to go down. You know, unless the price takes out this high, you have to respect that any push up into this zone might just be a retracement for it to then gather momentum and drop down. But if we see this high taking out, and then we could see price making higher highs and higher lows. Now, long term, there are certain areas I'm interested in, a certain price gap. So you can see these price pockets here, which price has left since I think like July of 2021, the market has left this huge gap here that usually price tends to fill. But here's the thing, market does not always fill it when we want it to, but we know that it will fill it. And so this is what this means is liquidity is rested up here, liquidity is rested above all these highs, and the moment price start making new highs, it's going to want to run all this liquidity. But we don't know whether the market is ready to do that yet. And so we have to try and trade based on the current structure on the markets. So based on current structure, the price is bearish, but we may look for buying opportunities to try and take this up. This retracement here, is actually a good movement, especially when you're looking at it in the intraday time frame. Now, while that is also said, if you zoom into this area here, and if you go like into the weekly charts, what you see here too as well is that there is imbalance here. There's an imbalance here that price may likely be going down to fill. So notice this zone where the market made this aggressive push to the upside, almost never retracing, leaving all these gaps. Notice that even after several months, the market came down to close all these gaps. That's the way the market works. It always finds this pocket. It always likes to close them. So the market has closed most of the areas, most of the zone. However, I have to respect the fact that there seems to be a pocket here. Now, I don't know whether the market wants to close it now or maybe in the future, but I have to understand, I have to respect the fact that there is price pockets here that price may want to come back and close before going up, because this is kind of like the only unmitigated zone, unmitigated pocket that the market has yet to close. So if you ask me what we're not predictors, but if I'm to predict what could potentially happen, I believe price wants to get up to this zone, maybe clear these highs. But in order to do that, it probably would grab the liquidity resting below here, pop into this zone maybe, and then push up. So that being said, we could have a push up into this zone, right? And then a push down into this zone before we start having a change of trend. So this is most likely what I expect in the coming weeks or months for EURUSD. This push down may actually go a little bit deeper and mitigate this zone, but this is kind of like what I expect on this pair. So either mitigate this zone, drop down into this SND zone and push up. But for this week, the opportunity in the week is not this long-term move. The opportunity in the week is this daily move. So because we could be pushing back to make retracement, what you could just do is draw your Fib, right? You could use your Fibonacci retracement tool, if you like those sort of things, and figure out where the markets could be wanting to go up into. So usually we want to see it going to the 38.2, 50.0, and the 61.8 Fib level, and that lies around this zone. So there is still room. If we're to measure this, we have from current price to the 38.2 is about 88 pips, to 61.8 is about 175 pips. Now you're going to need a way to trade it. Now, first thing, like I always mention, when you're doing analysis, there are three things you want to answer. First question is, where is the market going? Second is, how do I participate? How do I get in? Next one is, how do I get out when I'm correct, and how do I get out when I'm wrong? So where do I place my stop loss and where do I place my take profit? Those are three key informations you want to. I don't care what kind of trader you are, whether you're a price action trader, a smart money trader, a indicator trader, whatever it is you do, you need to be able to answer those three core questions to yourself and figure out how you're going to trade it. Now, bias, and based on this bias, now I have to respect that this is our zone. We're looking at, this is our impulse to the downside, and then we will likely see the market retrace, push back up into a retracement zone or a point of interest or an SND zone, however it is you call it. It doesn't really matter what you call it. What you just need to understand is how it works. So what you can then do is jump into a lower time frame. So we've looked at it from weekly and a daily time frame. You understand that long-term bias is much bearish. However, short-term bias might suggest that we could find opportunities to scalp or day trade into. Now, looking at this zone here, now this is what I wanted to look. Just looking at this region here, right? This is the 4-hour chart. Looking at this region here, what you notice is, so let me just adjust this like this. So what you notice here is that the structure in the 4-hour chart is also very bearish, right? Notice that this area here, the price is making lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. all down into this zone. So even this is the last, in the 4-hour chart, this is the last down move, the last push downward. And so any pullback up into this zone might still be just a new low to then a new high to then go lower. Or if you see this thing take out this zone, and then we could start putting new structure. However, remember, we like to trade in the direction of the trend. So while this is, we've looked at the daily chart, it's staying bearish. We've looked at the weekly chart, it's bearish. The 4-hour chart is still bearish. However, based on where price is, how the DXY is reacting, and how EURUSD is, where it currently is, we could find short-term scalp opportunities. So when I say scalp, I don't mean 30 seconds or 1 minute trade. I mean, few hours, maybe a few days trade. If I jump down to the 1-hour chart, right? So what I want to see, notice how I'm just going down on time frame. If I jump down to the 1-hour chart, what I want to see is a change in structure, a break of structure. So here's what I mean. Price is still making, making lower lows, lower highs on the 1-hour chart. This is the 1-hour chart. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Yeah, you get the drill. Now we've made lower low. Let me zoom in. We've made a lower high. We made a lower low, and now we've made a higher high. So notice that we've taken out this previous high. Naturally, you want to see this make a low and do the same thing. But now we've taken out this previous high. First sign. Now, if the market makes a lower low, well, it's still a continuation. So we'll call this the new low, and but now price has made a higher low. So first of all, it took out the previous high by making a higher high. And now instead of taking out previous low to continue the structure, it has made a higher low on the 1-hour time frame. And then if you notice, it has made a higher high here. So what does this tell me? It means, now this does not mean that we're not going to enter full-on bullish mode, but it means on a smaller time frame, like the 1-hour chart or the 15-minute or the 45-minute chart, we could look for opportunities to trade this up based on this structure. Now, with that said, I'm going to delete this part. So we now have a bias as to, okay, what we are looking at, the structure that should hold if this is to deliver to us. So what I like to do is identify the zones I'm looking at. This was our previous up move, and now we have this new zone to pay attention to. And I'm going to call this my structure. And now the question is, we could pull back. When we make pullbacks, remember the goal is to buy low and sell high. That means if I'm looking to participate as a buyer, I need to find some kind of low prices to get into. This is also where your Fibonacci could come in handy. You could draw your Fib like this, look to get into the 50.0 or the 61.8 Fib level, keep your stop loss below here and try to trade this higher. Now, when you get into the trade, you're going to want to manage your trades the way you see fit and the way that best suits your style. But right now, any pushback into this zone, any retracement, we had this, any retracement back into this zone could then offer opportunity for you to take this much higher to, a level somewhat like this. Now you're going to obviously, because remember the overall trend is still bearish. So even if you're looking to buy, you're going to want to protect your profit as you see them as price starts moving in your way. So basically this is the outlook. If market stop comes down into a zone like this, you could keep your, depending on how aggressive you are, you could keep your stop loss below this structure here or probably below this low here. It depends on your style, how aggressive or how conservative you are. The aggressive way will be to put it here. Your conservative one will be to put it here. The only difference is, well, your risk could be bigger here, your risk could be smaller here. Now you're going to obviously manage your trades the way you see fit, but areas to pay attention to is, so if we jump up back to the 4-hour chart here, notice that we are still in this push down. So even all this push, when you start making higher highs, higher lows on the 1-hour chart, it could just be to just mitigate all of these positions and then go lower. So you probably want to be taking profits maximum, at least either partial outs or protect your profit as you start seeing them. So this is like a 3-to-1. If you're doing this, it's like a 3-to-1 risk to reward. Obviously, you can manage the rest of the position. I'm not going to talk about that here because those are so exclusive classes. So join me for those. But But that's my analysis on Euro USD. We're going to jump over to GBP USD and do the same thing. So GBP USD, I'm sure some of you should have made a lot of money with me on this one. I've been talking about this for weeks right now, right? When price was all the way up here, we talked about selling. I got in a sell position from somewhere around this high here, and I am still in that position, and I'm going to be holding that position till we get into this zone. So, but that being said, I still, even with that one position, I still participate in other short positions, other sell positions within this zone as price move in our way. So let's get this one out. Now, before we talk into what we want to look at for this pair, let's look at the structure of the pair. So notice that, let's hide some of this. Notice how price was bullish all through this zone. So we had this region here where we had this strong bullish push. So this area, we had a strong bullish push. Since making that push and making this high here, notice how price has failed to take out this high. So this is our protected high that price has failed to take out. So you see how markets push down, push back up, made a lower high, made a lower low, lower high, lower low, lower high, lower low, lower high, making the same system. So now this last move here, so this lower low, lower high. Now this whole push up here could be construed, could be considered a retracement, right? A push back up to retrace or mitigate previous, get momentum to go lower. So that's in mind. First of all, we understand what is the structure of the market, where is price going. Based on this last structure, we can see that this is still, the market is still in a bearish mode, looking to go down lower. And that was the reason why I was looking at this area to participate, and I started selling from this zone to then take price down. Now, that said, we are still we've gotten into that position. If you got into that position, you should be in profit. You'd have closed, I'm sure you'd have closed some of your profits by now. But then we also need to remember that the market is not going to just move in a straight line. Just because price wants to go down doesn't mean price will just drop off the face of the earth. It would likely do some kind of reaction around this zone, why all of it will still be considered a push downward. Now, with that said, we understand long-term where this price is likely headed towards, and you can see how I identify these price pockets here that we might want to tap into. Now, if you jump up to the 4-hour chart so that we can look at the structure within this zone here, you will see that we've been in a clear bearish mode. So all these are trades I took. So this is where I got in my first sell. I got into a second sell here, and I was not able to get into a third sell here. I was looking to see price come up into somewhere like this to give me the next position to enter. So I have this and this running. Obviously, I've partialed out for those two, but that's the idea. Now, but notice here that the price, the structure is not, higher, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. That is how price has been delivering to us. And so with this move lower here, all this push up could just be a retracement to then go down further. And that's what we're trying to figure, because remember, long term, we identify that we like the directional bias of this pair is most likely more bearish. And so we are trying to see how we can take advantage of that and trade in that direction. Now, with this last push downward, we're trying to identify where could we likely head up to before going down. Now, there are certain areas there's an area I'm more interested in. We could push up into this zone to come and find resistance, however I like to call it, find resistance in this zone to then go down. So this is an area I want to be paying attention to. When price starts getting into this zone, I would be looking to see if we get some sort of price action rejection candle. If you're a price action trader, Wyckoff distribution from this zone, if you're a smart money trader, or maybe a trend line break in this zone on the smaller time frame, if you're into those sort of things, right? So this is an area you are interested in seeing what price does when it gets up into this area to look for confirmation. So So this is the story I'm telling myself. This is an area I'm interested in looking for opportunities to sell. And then this is where I'll be looking for confirmation. So just because I'm looking for price to drop down from here, doesn't mean it would. Price might have its own different idea. And if it slides through here, it doesn't necessarily mean, so if price goes from here and doesn't respect this area and slides through it, it doesn't mean that the whole bearish outlook is now changed. No, it may mean that market did not find enough supply here to hold, and then markets could want to go back into a previous zone to then go down further, right? So what I'm looking for here, what you should be looking for, is some sort of confirmation based on your own preferred system of trading to then take this much lower. But basically, if we get it to here and I find some confirmation, I'll be trading this. I'll be discussing about this to my traders on my cutting edge trading room and how this plays out, right? Okay, so make sure you join me for that. And then what other pair we're looking at? US oil. Let's look at US oil quickly. I think we still have time for a few. So US oil, the reason I like to look at this because what happens here kind of like affects what happens to the Canadian baskets, right? So you guys will remember this clearly. I talked about this when price was still here. And I was saying why most people will be expecting this area to hold. I really do not expect it to hold because we could see price run all the stop losses and liquidities arrest above here to then make a new high, to then retrace into this zone and go back up. Now, currently price is still at that zone, so nothing interesting is happening here. I would want to see this drop, into maybe this zone, or maybe this zone. I want to see a price drop into one of these zones to then go back up. Currently, I also need to understand that accept the fact that the part of least resistance is upward. So the markets could just keep grinding and heading upward. So instead of it might not just make a strong pullback, it might just keep making this tiny drag and keep dragging its way up until it seems like price wants to get to $100 per barrel. We could just get this drag until we get to that zone and then we get the drop. So however it is we play out, however it is this plays out, is something I want to keep in mind, especially if for card pairs I'm looking to trade that. But currently, nothing really clear here. We might just be distributing here to drop down. So this might just be a bigger structural distribution to then drop downward, or maybe an accumulation to then push higher. We'll see how that one plays out. But then with that in mind, let's look over at AUDCAD, which is one for the week. So AUDCAD, also like the Euro GBP USD, the structure is bearish. So this is daily charts. Clearly, you can see the structure is bearish. Even the line can see that the market is in a bearish structure here. However, we've broken this zone. So that means any pushback up might just be retracement to then go down lower. But with that in mind, you also need to understand that this pushback up could also offer us opportunity to trade with the market into the zone we like to then sell it back down. And then if you, for those volume traders, what you need to understand here is, so divergence traders, notice how we are having lower lows notice how we're having lower lows here on price. However, momentum is showing higher lows. So this is a classic divergence, right? And so what this means most likely is we're going to likely see price head back up, maybe to then find resistance or find enough demand or supply to then go back down. So this is the move I'm trying to capture, trying to trade. And then when we get up to this zone, I'll be looking to take this move downward. So that said, how are we looking? How am I looking to likely participate? So if we drop down, so let's hide this. So if we drop down to the 4-hour chart, let's look at structure. We're looking for structural shifts. Drop down to the 4-hour chart here, you notice that we are still in a clear bearish structure. So any push up here, you can see I've identified this zone as well, we could likely be coming up to. However, if we drop down a little further, drop down to the 1-hour charts. So this is a structural break, more or less. I was trying to identify the zone. So this is a structural break. I had an alarm set here to notify me of this. So what does that mean is I like this. I like short-term opportunity. I like short-term push to the upside for this particular pair. When we start pulling back down, I don't like, I expect it to go up, or this is a very high price for me to be trying to buy from here. So what I would like to see then is I want to see the market, wherever I decide to hold, pull back into, a zone like this, and then make the move like this. So this is somewhere I will be paying attention to within the coming few days. See if we get a push into one of these zones, I might refine that zone a lot further. If I drop to even on 45 minutes, it's just a clear push to the up. 30 minutes is just a clear push to the up. So basically, I'll still be looking at that same zone. So back to the 1 hour chart. I'll be looking for opportunity to participate as a buyer, but I want to see price drop into a zone like this. So this will be where I look for confirmation in the form of smart money or buy curve. So this is an area I'll be looking for to see if we pull back maybe between tomorrow, today, or next, however it is, and then see if we can then push the markets much higher. So for now, I wasn't able to participate as a buyer here. However, I'll be looking for opportunities to participate as a buyer when we start pulling back. And if you just use your fib, so, use your Fibonacci for those fib traders, and draw your Fibonacci from here to here, you'll notice that this is around the 61.8 Fibonacci retracement level. So anywhere around this zone, I'm interested in looking for confirmation to start buying, to take this at least first up to this point, and then to this point. So the trade would look something like this. Now, remember, I'm not taking this trade until we get into this zone because I want to see confirmation. But once I find the confirmation, my trade would look something like this, right? And now, obviously, I want to allow some of it to run to the upside like this. Okay, and then I think that should be it. We've done EURUSD, we've done GBP USD, AUDCAD, USOIL, DXY. And yeah, I think that's all I just got GBP NZD, yeah. So GBP NZD, GBP NZD. So GBP USD is one of my favorite pair going forward, because this one could provide us with some very, very good move. But we have to be patient. This is where patience comes into play. Notice the daily chart for GBP USD. Notice how we've been on this aggressive move to the upside, right? Notice how we've been on this aggressive move to the upside. And remember, the higher the climb, the harder the fall. If and when this decides to start pushing down, we could see some really aggressive move downward here. And since knowing this pair, this is one of the fastest or highest moving pair in terms of volume. Few pips, just few. If you measure from here to here, it might be thousands of pips. Just if it drops 30%, might be like this is like 750 pips move, because it's a very volatile, very, very volatile pair. So this is one where I would want to see some sort of confirmation to then look to trade this. I was looking for confirmation around here, did not find any. I'm not going to try and call the tops here. I'm not going to try and call the top. This is where people make a lot of losses. Oh, it's going to start going down and markets keep going up because, no confirmation. I wouldn't be discussing a lot of this here now. I'll be talking a lot about this in my private classes in the cutting edge trading room, because this is one that could provide us, this could be the trade for the first quarter of the year, if and when it does decide to play out. And I will be discussing how to get in at a much better price and how we can take this much lower. Okay, so that'll be all from me. This is okay. So I think I have time to take a few questions. I hope you enjoyed the class. We'll be discussing this in the cutting edge trading room. So make sure you join me in the classes tomorrow and next. And we'll see how we can figure out opportunities, not just on this one. There are several others. EUROCAD is one of them. EURUCHF, we'll see how we're trading all of those and look for opportunities to make money together in the market. I hope you enjoyed the training. If you do, so this would be uploaded on the YouTube channel as well. So if you go there, you leave a like and definitely subscribe to the channel. Okay, so now I'll take your questions.